Hello traders, you're welcome back to the Forex Geek channel. Now, in this particular video, we are just going to be dealing with a clean, no fluff approach to price action using the Bjorgum Key Levels Indicator. Okay, let me just add the indicator to the chart. All right, I don't know if I pronounced that correctly. Okay, but it's is it Bjorgum, or is it Bjorgum? I don't know if I pronounced it correctly. I hope I did. So this is the indicator we're going to be looking at in this video, basically. All right. It's as you can see, is a key levels indicator. Basically, the indicator helps you to identify key levels on the charts. Is very straightforward, right? It's very straightforward. Okay, this is the indicator we're going to be using as the foundation of this strategy. So let's be honest. Too many indicators just add noise, right? But the Bjorgum Key Levels Indicator does the opposite. Okay, it highlights the key areas where price has respected support or resistance in the past. Now, these are the zones where institutions make decisions and where you should be watching for entries. You can see that they've provided good entry points on the chart. Very straightforward, right? So what exactly does this strategy look like? First of all, let us talk about key level recognition. Once you load the Bjorgum Key Levels Indicator, it automatically marks out major levels, right? You can see the levels marked out on the chart, usually daily, weekly, or session-based highs and lows. Now, these are not just lines, okay? They represent areas where price has reacted repeatedly. That's our first clue. You're not looking for random moves. You are focused on reaction zones. Okay, now comes the price action layer. We don't just buy or sell at a key level. We wait for confirmation. And that comes from candlestick behavior, inside bars, pin bars, engulfing candles. These are all signals that the market is respecting the level. Okay, now here is a common step. Yeah, higher time frame shows a key level marked by the Bjorgum. So let's say a weekly resistance, right? Let's say a weekly resistance, for example. Now, let's say a weekly resistance has been identified. Then on the 15-minute chart or the 1 hour chart, price pushes up to that level, a level that has been identified as a weekly resistance on the higher time frame, right? Obviously. And then we come down to the lower time frame and it happens that price has retested that level. And let's assume that you see a rejection wick. Okay, let's just assume that this is a key, resistance, because as we went to the weekly time frame, the resistance, the next resistance is still a bit far. Okay, so let's just assume that price is around a resistance currently, and then we go to a lower time frame and you notice that price is getting rejected around that resistance, and you notice a reversal candlestick pattern, perhaps a rejection wick, right? You notice a rejection wick around the resistance. Now, is that not going to be a good opportunity to sell, right? So let's say you get a rejection wick and it's followed by an engulfing bearish candle. That's the signal, right? You're looking to short. You're looking for a good opportunity to enter a sell trade. Now, your stop goes just above the wick. So let's say you're about to enter a sell trade around here. So after entering your sell, your stop loss can be above that rejection wick. All right. And you target the next zone marked on the indicator. Your take profit can be the next zone. In this case, it's going to be a support zone, right? So the next support zone can be for your take profit for that sell trade. All right. So this is clean, it's structured, no guesswork. It's a straightforward strategy by a straightforward indicator, or rather with a straightforward indicator. Now, one major tip, do not ignore the context. Okay, is the market trending or ranging? Are you trading into news? Are there multiple confluences? You want to stack the odds in your favor. Okay, the Bjorgum key levels help you narrow your focus, but it is your price action reading that seals the deal. Okay, now Let's look for another example. Okay, let's be very practical with this strategy. Now I just want to use, okay, let us use this point that price reacted to this weekly support. Let's use this point that price reacted to this weekly support. We're going to go to a lower time frame now. Let's just get to the 1 hour and let's look for how price reacted on the 1 hour chart around that weekly support. Okay, so now we can see that basically this entire region, right, this entire region was where the weekly support zone was. Okay, so now you can see that on the 1 hour chart, the indicator also highlighted multiple 1 hour support zones within the weekly support zone, right? So now, because we are doing top down analysis, we have to start our analysis from the higher time frames. Now the direction in which you want to trade is the bullish direction, because it is the weekly time frame that shows rejection of that support. So now we are only interested in buy trades. So you'll be looking for bullish rejections around the support level on the 1 hour time frame or 15 minutes time frame or whatever time frame you want to use as your lower time frame, right? So in this case, let's say after we got this bullish pattern around here, you can see this strong bullish candle. You can see this lengthy bullish candle. This would have been a good entry point because price was already getting rejected from the support and it was backed by a strong bullish candle. Then we can use any of these resistance zones for our take profit, but just ensure you have a good risk to reward ratio. For the fact that the higher time frame is giving us that buy signal, it shows that the lower time frame will most likely respect it. So in this case, you can see that we use the highest resistance as our take profit, and we had a good risk to reward ratio 1:2. All right, so this would have been a good trade to pick. All right, but make sure you ensure that the market is trending. Okay, ensure that the market is trending, for you to use for a good risk to reward ratio, because in a ranging market sometimes you might have poor risk to reward ratio. So ensure that the market is trending. All right, if you want to trade in a ranging market, then you have to be careful. Okay, you have to be really careful. So this approach gives you clarity. The levels do the heavy lifting, and your skill with price action makes the final call. So if you are ready to simplify your trading and focus on what actually matters, give the price action strategy using the Bjorgum Key Levels a go. Now hit that like button, subscribe to the channel, and make sure you've got notifications on, because I've got more trading breakdowns coming your way. Let me know in the comments, have you used the Bjorgum indicator before? What is your favorite price action setup? Catch you in the next one. Stay sharp and trade clean.